Welcome to Real Estate Hustlers Podcast. I'm your host, Josh Appelman. Today we're joined with Ryan Byrne. Ryan is a co-founder of Cashflow Capital Club, leverages his finance expertise to help investors build wealth through multifamily real estate. With 1,000 plus doors under management, he empowers others to achieve financial freedom as well. Ryan, we appreciate you coming on the show today. If you could let the listeners know more about yourself.
Hi, thanks, Josh. Ryan Byrne. I have a company called Cashflow Capital Club, and we focus on deep value adds in the multifamily space, looking to buy apartment buildings where we can put our operations in and return substantial returns back to our investors. So that's our specialty, and we're here in Dallas, Texas. We're finding a ton of opportunities right here in the Dallas-Fort Worth area.
Yeah, I'm going to like this talk because that's finding the distressed properties, the properties with opportunity and upside. That's it's a very niche specific play, but it's definitely worth it if you can find it right. So, but tell us how you got started. What the travel was to get into real estate and where you're at now.
Yeah, I think a seed was planted way back when I was working at W2. I was working on Wall Street in investment banking as a financial analyst. I spent most of my time behind a desk and working in Excel sheets. And I read two books that probably everyone read by now, but it was The 4-Hour Work Week and it was Rich Dad, Poor Dad. And when those seeds got planted, it was hard to let go of that. And then I spent probably the next 10 years attempting to get into real estate in a meaningful way. I kind of started where most people started, and that was single family residential. Everything else was a little difficult to wrap your head around. A lot of complexity when you're reading it and you don't really know anyone in the space and it's all coming out of a book, but you can get in a real estate agent's car and go and pick up a single family residential and do a long-term rental in an area in your own neighborhood. So that's where we got started. Then we took the next step. We were forced into commercial real estate because we ran into problems on the lending side for single family residential. Conventional lending, you meet a ceiling once you borrow enough and you're still relying on personal income to get those loans. And we had money to invest, but nowhere to borrow. So that sort of opened the door into commercial multifamily real estate because we could take advantage of the leverage of our operating partners and keep on investing. And then as you start learning more about the commercial multifamily space, there were so many more benefits than what we could realize in the single family space that we really didn't look back once we got started in that. And one of those key benefits that I saw were lower risk profiles, higher returns, and forced appreciation. And that was key. That forced appreciation component was so huge because in single family, you're kind of waiting for the market. You're like pushing refresh on Zillow and you're looking at your neighborhood properties and that's going to tell you if you made a good investment or not, over the next 5 years. Just keep clicking refresh and it's like, what are the comps doing? What are the comps doing? Yeah. But in commercial multifamily, we can drive a lot of that value, which is hard not to love. So that's kind of how we got to where we are today.
So that's a huge play, especially you find the properties that you'd mentioned, they're distressed in some capacity, whether it's deferred maintenance or operational or both. And you can force the appreciation through raising rents, through renovations, through all the above. Tell us about your first deal in commercial, your first apartment complex, I'm assuming, and how you found it, and then what just kind of how you got there.
Yeah, so when we started, I started as a limited partner, just making the investments in the asset class. Through investing as a limited partner is where and how we met people in the multifamily space. Eventually, we formed a partnership with people that we were investing with. And it took a while to get to get traction in the space, because there's a lot of gatekeepers in the multifamily space. Some of it starts from brokerage, some of it just starts from availability. But it took us about a year of underwriting and submitting offers before a broker kind of gave us a chance. And our first complex was a value add opportunity in Augusta, Georgia, where we picked up two complexes, a 70 unit and a 75 unit. And the value add there, where the rents were just so far behind market. They had long-term owners who were happy with the cash flows, didn't want the turnover, weren't really treating it like a business. And the rents that were in place like in the 1990s, really.
Wow.
That was what we would call an operational value add. Beautiful asset, good location, but didn't have operations and weren't really treating it like a business. And that was the opportunity. When we opened the door to investors for that opportunity to participate alongside with us, that's when we discovered how big the appetite was for that particular play. We made it seamless and easy for investors to come and join us, and they were able to participate in something that they wouldn't be able to find on their own, and no one else was going to give them the invitation. I think to do that, we raised $4.5 million in about 72 hours.
Oh, wow.
And that's when Cashflow Capital Club was launched. So now we have a network of investors who sort of know us, like us, and want to participate in the deals that we do in the future. And that's where it all started.
So is Cashflow Capital Club, is that your investment arm, and then you've got an operations arm on another entity?
Correct. We have two operational partnerships, but our investors come through us through Cashflow Capital Club, and that's how we invest.
Got it. And then do you all do the management in-house?
Yes. That's something that we started from the get-go. I had participated in a large multifamily mastermind, national mastermind, where we share best practices and talk about our pain points. And one of the pain points that all operators talk about is third-party property management, finding the managers that could execute the business plan in a timely manner. And the reason we started with those larger complexes, not larger, but like 70 to 100 complexes, because that would give us the scale to put people in place and bring have operational control on what we were doing. And then we just kept adding on from there. So bringing property management in-house is kind of the goal, not for profits or profitability, but more just having control on that execution.
Yeah, I mean, it's, if you're managing the construction, the property management, and the acquisitions, your cost goes down versus what you'd be paying out for someone else to do all of that above. So then that also creates more value for the property, because now you're controlling the cost. You're able to blend the cost across multiple entities, and it helps the property level. That's really, I think that's the true strategy that really that should be out there to play the investment arm play. Tell us, so on that property, did you all do any renovations? Did you just purchase out the owners and then take over operations and do your thing, or was there any significant?
Yeah, we had to start with new people who weren't set in their ways and saw the vision that we saw. Renovations, we had to renovate 100% of those units, but it's like a light turn. We're talking carpet and paint and some trim, new appliances, where we could get that done for about $10,000 a unit. And our plan was to do it over 18 months. We ended up doing it in about 8 months. A lot of the renewals stepped up to, close to market, not at market, without any renovations at all, which is helpful. And that was the play for that acquisition.
Oh, yeah. That's incredible when that happens too, because you're able to keep a tenant, not go in and renovate, and then you don't have the disruption and disturbance on your rent roll, and
Yeah.
that's huge. Um, on the construction end, do you all procure the materials and the labor and keep the scheduling, everything in house?
Yeah, we go out and work with subcontractors to get the work done. We'll do kits. Now we do kits as a to have them ready and delivered when the turn needs to be done, and then we can get the turns done. So
Who are you all getting the kits from? Is it Lowe's, Home Depot?
whoever is the best available and has them ready in
Okay,
time. So yeah, we've used Lowe's, we used Home Depot.
got it. Very cool.
Now we're using Amazon, if you can believe it. So
Yeah, no, we do the same. Just because there's a lot of components that you can get for maybe a third of the cost.
yeah,
Um,
and sometimes it's timing. It's like
yeah,
who can get it to us now? Because I mean, the last acquisition that we did had a low occupancy. That was the value add play. Out of state retiree in his 70s, lived in California, was in a great, fantastic area with high demand, had 70% occupancy. And we wanted to do those turns as quickly as possible. So it was like, who can get us these materials today so
yeah,
that we can get these units full and get it cash flowing? So
yeah. Well, and that's the benefit of being vertically integrated, is that you control where the materials are coming from and the cost. And if you're conscious about what the cost is, the more you save, the more you keep, then it works. That's where it bonuses off at the end, for sure. And then operational, are you all using Appfolio or what system?
we use Resman,
Okay.
and we've used Entrada. We started with Buildium, but as we
Yeah.
got bigger, we migrated.
Yeah.
We migrated to Entrada. Entrada is basically a legacy system. It has a lot of setup involved, but it's the system that our COO, our newly hired COO, was very familiar with, and that was a huge driver in using Entrada. So, and then
Entrada.
yeah, so Entrada and Resman are the two that we used.
Heard of Resman. We started with Buildium too, and then went over to Appfolio. Are you all migrating any of your operations over to an AI component or AI assist?
Not yet. Not in a way that would be impressive, I guess.
Yeah, we're
Um,
looking at like maybe a front end conversational AI to help filter calls and get them to the right, either get their questions answered or get them to the right resource.
yeah, we did some AI on the marketing front. It's been really helpful, but just small stuff,
Yeah.
like format this, clean this Excel sheet, that kind of stuff, but nothing that would be systematic. I've seen some lead gen and sort of SEO stuff that looks pretty impressive to get visibility both from investors and brokers.
Yeah.
But I'm kind of learning as we go. We'll see. I'm hoping a third party can come in and rescue us on that front. But
I tell you, it's gonna be massive. I was at a not a conference, but more of a small gathering this morning, and it's just going to impact the insurance industry, banks. I mean, any and every industry is going to be impacted in some way, some sort. So it's just getting not even ahead of the curve at this point. It's figure out how you can blend in, and it can assist you to help scale and grow, and really take away the painstaking tasks that now you can leverage your people for at higher capacities. But um, it's exciting stuff more than anything. But let's get back to so now you're over a thousand units. So what accelerated that growth? Was it finding the properties, and how do you all find your properties? Off market, on market?
yeah, we find them through about 70% come through direct broker relationships. So mind you, it took us like a year and change to get that first deal. So, and then a little snowball started rolling down the hill.
Yeah,
And once you're on the broker radar, and we had the ability, like through that first transaction, we closed pretty quickly. And once the brokers have comfort and your ability to close quickly, you're going to get more deals. Like we were low on that list. I don't even think we were on the list, to be honest. Like we were like a dog barking, it's like, hey, what happened to that offer? You still good on that offer? And then we happen to be a backup offer. Now we're getting shown stuff way before anyone else, which is, it's a benefit to everyone, because we're all kind of looking out there for the same type of opportunities. We have deal flow and we're sourcing it. And now the symbiotic relationship is partnering with others who want the same thing that we do. Right. And so now it looks a little bit different now that brokers know and trust us.
Yeah. Yeah. Once you close one deal and then two deals, and now you're all of a sudden getting deals that are not out there anywhere to be seen. It's just an off-market list. It's coming from brokers. That's usually that's how the preferred way to transact in multifamily is. It's undisturbed. It's not, you don't go on a million tours, not exaggerated of course, but all these tours with different buying groups. You send it to the guys you know can close, and that would be serious if it moves forward. Because a broker, I mean, if they get it tied up and LOI approved to move on to PSA, I mean, they're 60 to 90 days that they want to make sure that they're going into the close, not to have to go remarket it and then the property is tainted. So the broker relationship is huge, and it does take time to build that trust up. Though, if you're new in the neighborhood, it's hard to get traction. Experience that ourselves. It takes time.
Yeah.
What are some learning lessons that you've learned along the way?
This whole thing, it evolved. And I mean, I think when we started multifamily, the vision was like an additional income stream, maybe even like passive, if you want to call it that. But once we got started in this, and it took us so long to find that opportunity, and then we were presented with another opportunity very shortly thereafter, we had to go after it. It was sort of like, how could we not? This became more than just a full-time. It's like full-time with people. It's very actively managed. Even if you're doing a smaller thing with JV, I think people end up spending a lot more time than they had thought or anticipated. So lesson there, don't underestimate the time that is required to do a multifamily project, especially if you're going for a value add where there's a huge operational overhaul required. Sometimes maintenance, it's even going to take more so. And maybe, you transition into something that's more seamless or passive as it gets stabilized. But I would say that's an important lesson that we learned. I would say the other lesson is to share what you're doing with people. They will surprise you. Give everyone a chance, and we need each other, right? No one in the multifamily space is doing this alone. If that was kind of our approach, I was a W-2 employee. I knew everything, do it all myself type of attitude. That slowed growth, and then growth accelerated once I opened up my eyes to the concept of partnerships, both equity partners, operating partners, and working together with a good group of people where we all benefited from each other. That was huge.
Yeah, no, without a doubt, that's a communication, like just sending out email updates of the project. There's so many things that are happening out there. The renovations, the rent rolls dipping. You're below it's just a lot of moving parts. But to keep everybody up to date and what's happening around the forefront, it definitely helps, and it builds rapport and trust.
Mm-hmm.
So I totally agree. Have you all? I know you went full cycle, but do you sell or do you just buy and then refinance and hold forever?
We're in such hot markets. It makes me ill thinking about giving up our footprint in the markets that we're in. I would like to keep this going and riding all the growth, because it was so hard to get in. We were very focused on the key growth markets in the United States. We're in 3: Charleston, Georgia, or Savannah, Georgia, Charleston, South Carolina, and Dallas, Texas. As long as the growth is there and it looks good to us, so we like to refi and roll and return capital back to our equity partners in that way in a very, very tax efficient manner, as opposed to selling and then starting all over from scratch. I mean, we put so much work into getting the operations and the systems in place, and there's more than one way to capture the value add or go a full cycle. I would call a full cycle returning capital, keeping your equity position, getting those cash flows, and then putting another asset on that conveyor belt and doing the same thing. To let go of it and start from scratch with everything and finding a new opportunity and learning about the asset itself, both physically and operationally. I don't think it's the best play unless you're in a market where all there is the value add, right? So you have this value add, and then if the market's hasn't done anything in the last 10 years, most likely isn't going to do anything in the next 10 years. I think that would be a different situation for us, but that's not the case.
Yeah, no, I agree. I totally agree. I mean, once you sell it, you create a whole nother problem, because now you've got to get the cash working again, and you just had it working. And then as an operator, you've got a vested interest in that property. You've taken it from distressed, from nobody wants, to now it's operating, it's clean, it's efficient, looks good. And so yeah, hold forever is a good strategy, or hold until, like you said, it makes sense to dispose and go find something else. What class are your all's properties? B class, A class, C class?
We are 100% C class, which we define as pre-1990s. So everything that we've purchased has been between 1979 and 1985. Good bones for the most part. And I think that's where the opportunity is for us and our size and what we're doing. I mean, we're looking at the 100 to 200 units thereabouts, and those tend to have these mom and pop legacy owners that have just kind of stepped away from the business side and where we can add the most amount of value. We don't get a lot of exposure to class A and class B, to be honest.
I don't know if there's even a real upside there neither. I think it's more of coupon clipping and just kind of reserved for the, if you want a steady Betty 5% return, 4% return. But I mean, the value add, 1979, you're in pre lead paint years. So, or post, sorry. There's the play. You just cosmetic upgrades, raise the rents, and like you said, forced appreciation. Very good. Very cool. Well, Ryan, if somebody wants to get a hold of you, reach out to you, learn more about yourself and your company, how can they get a hold of you?
You're going to go to cashflowcapitalclub.com and you'll request an invitation and be part of the network and take an inside look at some of the deals that we're bringing to the table. We are an inform and enrich type of company. We want you to understand our business propositions and our opportunities, forwards and back. And it makes it easier for people in our network to invest with us and get excited about the opportunity. So yeah, just go to cashflowcapitalclub.com. It's easy to request an invitation, and that's how you find us.
Awesome. Ryan, definitely appreciate your time. Look forward to following